Hello, trading has closed on the 1st of May 2024. We'll do our disclaimer, go over our calls, and make some predictions. It's my trading plan for Thursday, the 2nd of May. Please remember, my calls can be wrong. Trade at your own risk. The system I use gives targets. It doesn't give entries or exits. I use things other than my system to make the calls, but if you're interested in the rules, here's how to order. Well, let's go over what we said. We had the pattern with the early high, which is this, and tomorrow should have the early low. First thing we said was I just least to wild moves, and I just can't predict them with a sufficient degree of accuracy. I don't usually trade on those days. Well, that certainly was true. Look at this wild move here. I don't have any system that enables me to trade that with confidence. I know other people probably make lots of money on moves like this, but I think somebody's going to lose lots of money, and that's just not the way I personally trade. We said that the wall into the close was highly suspicious, might be a false move. Well, the idea was that when the drop comes this late, it's not big money behind the drop, it's the amateurs, and they're usually wrong. What typically happens is you gap over this high and you go much higher. That didn't happen, but we did get a gap and we did trade over it. It just wasn't promptly. My suspicion is that the FOMC announcement kind of delayed the move I was expecting. This is the kind of move I expect early on, and probably the inactivity before the FOMC delayed the move I was expecting. But I wasn't risking any money on it, so it doesn't matter too much to me. I think the general idea was right, but not the time. And the other thing was, I said, gapping under Tuesday's low is all bears need to do to keep the decline alive. Well, we gapped under the low and we traded lower. That's really all you have to do. So technically that worked. I think it would have been more precise had I said maintaining a gap is all you need to do to keep the decline alive. This action kind of makes me suspicious of declining further, but if we follow through and take out these lows, I'm going to believe it anyway. Now, we do get to cross a target off the list, 50, 25, 74 from last week. Notice it's not only a target, it's a support resistance area. Notice also almost exactly equal to the FOMC announcement price, which is also announced, which is also at the support resistance area. And breaking it in the last 5 minutes doesn't mean much to me unless it's maintained. If we trade over this tomorrow fast by gapping up, and futures are up as I'm recording this, that doesn't disturb me. You can have slight breaks of this announcement price. But if we get rid of this gap up and keep going down, that can be resistance. And if we are on the way down, we should trade under the FOMC announcement price by more than we traded over, and that's over 70 handles if this decline keeps on going. But we don't know that yet. We do have a MEJT target of 50.1482, and because of the rules I wrote, I'm going to use that as my call for tomorrow unless we gap up smartly. Now, I have to have a caveat here. I devised the rules between June and August of 2002, so we're talking almost 22 years. And I have specific rules and specific prices for what triggers a buy signal. And if we had a buy signal, that target wouldn't exist. Now, we missed it by 1 cent. And the question is there a tolerance on the buy signal? Well, I've had some that came pretty close, and so far at least, you've always had to hit the signals, so based on that, that would be significant. But in almost 22 years, I don't recall having one that missed by 1 cent, and had I made the rules with a tolerance of 1 cent, had I done that, there wouldn't be any lower target. So I'm going to stick with the rules I wrote, but it's that close. I don't have any past examples to look at, and so I can't have my usual degree of confidence. I don't have one that missed by that small an amount, so there's no precedent to look at. And I came up with the rules by looking at hundreds and hundreds and hundreds of charts, if not thousands. So let's take a look and see where we stand. Now, the first move after the FOMC announcement was up, and that usually tells you the next move of consequence is going to be up, but it doesn't stop us from having the whipsaw first, which would take us way down over 70 handles under this price before having to move up. So let's take a look at some charts. Now, this was a break under this trend line, but we didn't maintain a gap. I mean, gapping and not holding it isn't a gap. So I'm suspicious that this isn't a real break under this line. There's also a wall into the close, and I'm suspicious of that. So I'm suspicious this might not be the real thing. But if this is the right count, you can count it ending here, and you can even count this as a triangle, and then you can just collapse from here. So I can't rule it out. But that's not the only count. I didn't have to play too much with the count I came up with yesterday. I just moved the B from here to here, and I moved the C from here to here, and the fibs still work, and it looks a bit less forced to me than the count I came up with yesterday, because 618 for C is a much commoner length for C compared to A than the one I had yesterday, and the red B I now have here instead of here, and all these things still work. They work perfectly. So if that's the right count, this is as bullish as the other one was bearish. And I think we're going to get that resolved early tomorrow, and guessing is not my long suit. I'm just going to wait to see what happens. Should be a sizable move, I think, regardless of which of those two things happen. So we'll use the mixed signals rules, which are right here. Tomorrow's pattern has a really low regardless of how we open. It's bullish, we gap down, hit a lower low, but close over intraday lows. If that's maintained at the open, it should lead to higher prices regardless of how we close. Of course, if we gap under it, that substitutes for, if we gap down, that substitutes for today's close, and there's no bullish pattern. First move after the FOMC announcement was higher, should tell us the direction of the next major trend, and that's good stuff. Now it's bearish, there's a lower target, so unless we gap up smartly, the rules call for it to print. But again, we came within 1 cent of getting a buy signal, in which case there would have been no lower target, and had I written the rules to allow for a tolerance, there wouldn't have been a lower target. I just don't have any past occurrences to refer to. I just don't have my usual confidence that that target's going to print. If the FOMC whipsaw is in effect, we shouldn't trade significantly over the FOMC price, and we target the print under 49.5270. A little leeway on that, but if we can't break over the price, we're going much lower. So according to the odds favor gapping smartly at the open Thursday, we have a wall into the close, and that argues for the gap being up, but it isn't a lock as today's actions show. That's just what usually happens, not what always happens. So futures are up, there's a wall into the close, and these lows held. All that says this could be going much higher here. But if we are down and we stay under 50.2441, give or take a little, it isn't exact. We have the target of 50.1482, but there's no reason for us to stop there. I mean, that's way down here. If we're going to visit that again, and we don't promptly come back over this green line, I don't see any reason for us to stop. I mean, we could be at 49.52 or whatever I said. What did I say? 49.52.70. So I think the early action is going to be critical. It's going to be critical, and I think we'll know before the open if we're going to break through this or just reject this last minute drop and probably trade over this high. And that's today's call.